Well, that's the word coming in from Gautam Trivedi. Don't chase the index. There's not much happening, but a lot is happening in mid caps, especially outside the index. Well, one stock that actually never fails to excite investors is the stock of Tech Mahindra. So let's turn our focus now to individual corporates and stocks. We have with us Mr. Vineet Nayyar, the Executive Vice Chairman of Tech Mahindra, joining us. Mr. Nayyar, thank you very much. First up, actually, I'm excited about the fact that you are one of the guys who has got the payment bank license. What are your plans over there? Will you be tying up with somebody? Will this be a go it alone kind of venture? And what does it mean to the listed stock at all?
The implementation of this is still cooking. Clearly, we have two great advantages to begin with. One, we have the technology which has been tried in 17 African countries and multiple Asian countries, and I think our turnover there is over $1 billion a day. So this is something we know very well. We have also Mahindra Finance, which has worked in the agricultural sector for a long time. And Mahindra is a name which is recognized in the rural areas, given their tractors and their motorcycles. So net, I do believe we have multiple advantages. Now we have to make it work, and that's always a big challenge.
Okay. You wouldn't be wanting to tie up with any telecom company or anyone else. Are you looking for a further partner?
No, at this point of time, no.
Okay.
Since we have the technology, why would we want to go with any other company in the telecom area?
All right, Mr. Nayyar, good morning. Thanks for joining us. Well, just to come back to the core Tech Mahindra business itself, the one concern that the street has had for a long time has been the low margins that Tech Mahindra has delivered. Even in the quarter gone by, the EBIT margins at about 12% was significantly lower than a lot of your peers like Infosys and TCS. Can you just give us a sense of what the trajectory from here on will look like, and when can we expect the gap between Tech Mahindra and its peers to get narrowed in terms of margins?
Please understand our strategy. We pick up companies at relatively modest prices, and then we restructure them and make them work for us. I don't need to tell you about Satyam, but we did pick up LCC, a very large company in the network space. It's a great company. It was the biggest independent company in existence in North America, with a footprint all over the world. Now we are restructuring it. It will take some time, and it should come back. And with that, it will have an impact on our overall margins. But I do see margins improving as we go further.
Okay. Are you already seeing the restructuring working at LCC, and is that getting reflected already in terms of higher utilization and other parameters?
It's not something we can do instantly overnight, because if we could, LCC would have done it themselves. I wouldn't say it's a very long haul, but it will take a few quarters before it shows results. But I can already see some improvements taking place in their EBITDA margins.
So when you say margins will come back, what kind of timeline are you looking at? Because I remember you used to clock in 20% margins, I think, in FY14, and now the space has become very competitive. So by when do you think you could get back to 20% margins?
I think we'll do it in about 2 to 3 quarters, hopefully.
Okay.
As you know, one can't commit. One can't even foresee the headwinds which can come in or the tailwinds. But I would expect that in a few quarters we should be right there.
Okay. How is the business in terms of new orders? Has it improved globally? Or are there pockets where the competition is so intense that actually things are getting even more difficult?
No, I'm quite positive about the growth in business. You're right. Competition is increasing. and one has and the nature of the market is changing. And the question is, how best do we prepare ourselves for the changed market? And I think that is a much bigger challenge at this point of time for all service companies, especially the Indian ones, to prepare for the new environment we will be facing very, very soon.
I assume you're alluding to the fact that social media and analytics are the new calling.
Yeah, analytics, yeah, Internet of Things.
Yes.
Business service, business process as a service. So all these things are happening, and I think the winners in the next round will be the people who are ready to provide capability to all those who need it as we go forward.
So is Tech Mahindra prepared? Are you seeing yourself better in that position compared to, say, a quarter ago or 2 quarters ago?
Yeah, as I said, this is one thing which has our complete focus at this point of time.
Okay. Can you tell us a little bit about what the trajectory for the telecom vertical will look like now? You had a decline in your telecom revenues by about 4% quarter on quarter in the previous quarter. Is there any recovery expected anytime soon?
I gave you the basic reason for that. I think we will see some uptick, but please don't push me on this, because we normally do not make projections.
Okay. No, we just want to know if certain parameters are improving so as to get a handle on the margins. For instance, is utilization better? You improved from 71 to 74, so is that better? Is attrition down? It remained at 19%. Are these parameters improving?
I might as well tell you the numbers then.
All right, we'll leave it at that. Yeah, Sonia?
No, well, I'm done with
Okay. All right, Mr. Nayyar. Thank you very much for joining us with your thoughts today.
You're welcome.
All right, so that's the word coming in from Tech Mahindra. Business tough, but they are gearing up and should reach better margins in two or three quarters. That's the word from Vineet Nayyar. Well, let's turn to the other stock which has been in focus, and that is the microfinance space.